Yo, what's up, everyone? How's it going today? Does this work? My live stream? Can you guys hear me? It's my first time live streaming in the new house with some new settings and a new monitor. So, just seeing if it works. Let me know if it works. I'll just give it like 2-3 minutes to let some people log in. Alrighty. Hi, everybody. I have a lot of camera angles. It's all about the angles, right? You guys want to see my angles? Here's just me on one. Here's me on the other. This is a good camera. Like, this is a pretty good camera, but it's really unflattering. I've noticed I've gained a lot of weight in Turkey, right? I look like a turkey living in Turkey. This is the second camera angle. This one's good. This is the one I like. But this one here, the camera, I gotta upgrade the camera. It's too white. The white balance is really off. Shows a lot of sharp details, which I don't like. Anyways, hope you guys are doing good. Hope you are doing very well. It is almost the new year already. And with the new year, we should all be very excited because, well, 2024 is going to be the most epic year. Okay, the people that actually believe there's still going to be some sort of bear market, I'm sorry to say, but these people are just delusional if you think Bitcoin's going to make another low. And I'm going to talk about the reasons why it's literally impossible to make another low based off of historical trends, all right? And if you're questioning yourself, for example, like, did I get in too late? Is it too late right now to buy into crypto already? The answer is no, it's definitely not too late. And I'm going to explain to you some of the metrics that I go over from even a fundamental perspective, but mainly related to charts today. I don't want to get too into fundamental. And I'm going to talk to you guys about why probably between like January and I'm guessing May or June, so 6-month period, you're going to have some really good buying opportunities, okay? So first of all, just to summarize fundamentally, that the elections are coming up soon for America. Election period is going to be in November, so this is a good calendar to follow, okay? So this is a really good calendar to follow, and you have to understand that politicians are going to talk positively about fixing their economy and especially creating a new set of rules to adopt crypto because America is lagging behind. The headline news right now is that America is not adopting the crypto, not allowing institutions or retail investors to adopt crypto, but every other country is allowing it. And they're hopping on this blockchain technology, but why isn't America? And they're just going to be left behind if they are not adopting it to create policies that will regulate it. So you can expect that when the elections come around by November the 5th or December the 17th, when they vote, you can expect a lot of policies that will be positive to help Bitcoin. It's not like politicians will say really negative things, right? to push crypto away. No, they want to gain votes, not push away a lot of voters. And we see what Bitcoin has done. Not only that, around this time, I'm confident that the interest rate will be fixed. It'll be much lower. The money printer will come back on right now. So inflation, when it's at an all-time high, interest rates are at an all-time high as well, simply because they want to limit the amount of money people spend and also borrow. So right now, there's no buying power. There's no borrowing power to grow your business. So if you wanted to get a loan to buy a house right now with the interest rates, what is it? Interest rates in America. If you guys have ever done the math right now, okay, so the interest rates right now is about 5.5 in America. If you guys take out a loan over 20 years, just as an example, with an interest rate around this high, the amount of equity that goes into the actual home in like the first 8 years is almost nothing at all. I mean, if you just do the math on, for example, a $400,000 home with an annual interest rate of about 5.5%, like you'll literally never be able to pay off this home. Like, and if you do, your mortgage rates are ridiculously expensive to the point where people can't afford it right now. So when this interest rate does go lower, like, a reasonable rate is 2-3% right now. If you take a look at Turkey's interest rate for housing, it's like where I live, okay? Right now, Turkey's interest rate is about 18% right now if you wanted to buy a new home. So people in Turkey, you can't buy a home with this type of interest rate, right? That's why Turkey's economy is messed up right now. So by the time the elections come into play, by the end of the year, of next year, you can expect a lot of positive policies will be made to fix the economy. And the interest rate is one of the key factors that will allow people to grow their business, take out loans for businesses, or be able to buy houses especially, right? So when these interest rates lower, there's going to be a lot of money printed as well, which means a lot of money could be injected into the crypto market. So I can talk a lot more about this, but this is just one of the facts, okay, that is going to encourage the growth of crypto by the end of next year. Now, another really interesting thing I'm going to tell you about that I talk about often is the Bitcoin return on investment after the halving. And then after that, I'm going to show you the stock to flow model. Okay, so right here, this is after the Bitcoin halving. Now, 2013 were the bull markets, and then 2017, and then 2021, right? So in 2012, when the halving occurred, okay, after 2012, the first Bitcoin halving, it ended up doing an ROI of 92, okay? And then in 2016, right, till the all-time high, it ended up doing an ROI of 30. Like, we're talking from the Bitcoin halving to the all-time high in December of 2017. It did a 30 ROI. And then last cycle, which was from when was it? When did it begin? 2020 was the last halving, okay? And then we went into the bull market to the end of 2021, and that ended up doing an ROI of 7.86, okay? And what you're going to notice, like the first one, we don't need to consider it. What you're going to notice is this, okay? The first bull market lasted from the beginning of the halving to the all-time high. It lasted about 525 days. And the next cycle lasted about 546 days. So, and the only reason this tends to happen is because Bitcoin's halving is seen as an anchor point for when the bull market begins. And the next chart I'm about to show you, it's going to blow your mind if you haven't seen it before, okay? So it's really difficult to argue with the fact that Bitcoin's halving anchors a point where the Bitcoin bull market begins. And that's also a point where lots of accumulation happens during this halving for the alt season as well. And we'll get into diversification of portfolios as well. Hi, everybody. Hi. Thank you for joining me. So we can expect that Bitcoin's next bull market will probably be somewhere between, I'm guessing if it was really short, 450 days to maybe a little bit over 500 days like we've seen so far. So after Bitcoin's halving, despite having a small drop or not, it doesn't matter. It's going to soar to something ridiculous. Now, if we take a look at stock to flow model, okay? And by the way, just to talk about the bullish sentiment, every year we have diminishing returns. So in 2017, 30 ROI from the halving. 2021, 7.86 ROI. Every year the ROI is going to diminish because it's harder to make double gains. So let's just say the ROI was even like 5, okay? Like 5. We're talking 5. That's a little bit less than the last halving cycle. If Bitcoin was at $40,000 and the ROI was 5, just taking a wild guess, Bitcoin would be finishing at $200,000 by the end of the next bull market. That's possible. Even if the Bitcoin halving, the ROI after that was only 3, and we finished off at 40K, 3 is a reasonable number to guess because it's much lower than the previous cycles halving. That would still be $120,000. Okay, now take a look at this chart. This is a stock to flow model chart. Okay, this red line that you see is the stock to flow model chart. And what this represents is it's an estimate based on the level, it's based on the number of Bitcoins available in the market relative to the amount being mined. Okay, so that's one line. And now the next line shows you the days until the next halving. Okay, so if we're really far away from the halving, it's red. As we get closer to the midpoint, halfway through, closer to the Bitcoin halving, it turns to this color. Okay, I'm going to move my camera just for a second here. Actually, I'll just do this for a second, okay? You guys see that? Yeah, you should be able to see this. A little bit easier to see. Okay, so you see this right here. So now it turns to a lighter color, to like something like teal, but closer to blue basically. And then now, when it gets really close to the Bitcoin halving, it's going to turn more blue. And then as it gets pretty much right to the Bitcoin halving, it turns this like maroon type of color. So these vertical lines, it indicates when the Bitcoin halving is. I need to remove my camera here. Actually, it's in the way and I need a bigger screen. Okay, see this right here? So every time it gets to the Bitcoin halving, well, as it's getting there, it gets more and more and more blue and turns to that purplish color. And then it turns to that maroon color and boom, the Bitcoin halving starts. And what do you notice? Okay, if you take a look on the chart here, what's the first thing that you're gonna notice? You're gonna notice that as it's in the red, that presents a really good buying opportunity. But more likely, as it's in the blue stages where it's leading up towards the halving, that's the best opportunity to buy. So if you take a look here, that opportunity before the halving is the best time to buy. And then, how do I reset this chart? I did it by accident. Give me a second here. Double click to reset. Got you. Come on. Okay. I'm just going to reset the page and not click on it. How about that? A little bit easier. Okay, there we go. So notice in the blue here, this is the best time to buy before the Bitcoin halving. And also, if you notice here as well, in 2020, that was the best time to buy. But the thing about 2020 and 2016, two different things happened. In 2016, you'll notice that it actually ended up dropping here before the halving, but in 2020, it ended up dropping after the halving. Or sorry, before the halving. But regardless of if it drops before or after, when you're buying it before the halving happens slightly, when it's blue, those are the best buying opportunities. And then as you get the halving and it leads to getting down here again to reset the cycle, so it goes from red and then it's going to go through these colors and counting down to the Bitcoin halving, and you'll end up noticing that you're just going to be chasing it as it gets more yellow, right? So if you're waiting till way after the halving to get into crypto, it's just going to be too late, to be honest. And if you were to ask me, like, what is a good time to get into crypto? Well, I'm giving you an indirect answer right now. Okay, I can't tell you exactly what to do, but I can be suggestive and say that based off of the halving cycles, you might want to be inclined to get into crypto before the halving. So this is usually how the year is. So the year begins, the halving year that begins, that's a really good time to consider getting into the market. So right now myself, I'm almost all in already, except for about 500K left that I'll put into the market when we get closer to this halving point. So make sure you guys are being diligent. So is it too late to get into crypto? No, it's not too late, but it will be too late soon. Now, another really interesting question that somebody asked me in the Discord group was this. I'm up about 50% right now in my portfolio. I've been holding for about 4 or 5 months already. I'm up a significant amount. What should I do? Should I sell? Should I take some of my profits? Should I just hold on to it? I don't know what to do. So this opened up a much bigger topic overall. Okay, he wasn't really asking like, what should I do? What he was really implying was, I have no strategy at all for how to take profit and how to get back into the market. Does that make sense? So when you're in a position, first of all, you got to know the cycles. Okay, you got to be aware of these fundamental things that are going on. Secondly, you have to have a strategy for how to enter, right? How to enter, when to buy, when is a good period to buy, which I'm outlining for you if you haven't got into crypto already, right? But how to buy was easy. In my opinion, it was easy because when you compare things like the fear and the greed index, the price drawdown from the all-time high, and also you take a look at historical risk levels, these three things, when you combine it on a fundamental level, they are really going to help you encourage decisions to buy, okay? So right now, the fear and the greed is about 70. It's not the best time to buy, in my opinion, because it's too close to the halving, and the fear and the greed is high. Like right now, the fear and the greed is too high when you compare it relative to the risk as well. So I'm more so waiting for this capitulation before the Bitcoin halving or slightly after it, but more so near the halving where I think the cycle is anchored. So if you take a look at historical risk levels, when like early in the year, okay, in like November 2022, December, January, when the fear was literally like 25, okay, it was really, really low. Or sorry, the fear was high, the greed was low. Like that's what it refers to, okay? So high fear, low greed. And then when you compare it with the drawdowns of historically reaching 70 to 80% before, right around the same times as November and December, and then you compare it to historical risk levels as well, okay? So the historical risk level was like, in early in the year, it was like really low. It was under 0.2. So you combine drawdown of near 80%, you combine fear and greed, where the fear is really high, and then you compare historical risk levels where it's really low. So these three factors should have been like, okay, maybe early in the year, I should have bought Bitcoin and Ethereum, right? So that's one strategy you could have used. Another strategy you can use is the opposite as well, right? So you take a look at when the fear and the greed index, when the fear is really high, or sorry, the greed is really high, it's going to reach like yellow points, green points up there. So when it's really high, like for example, at the end of last bull market, okay, we'll take a look at the greed. It was 84, okay? And then you combine that with the historical risk levels as well, where the historical risk level was near 1. So every time the risk level is near 1 or basically above 0.8, that's when you get out. Okay, you don't even need some indicators to show you that the risk level is high, and then the fear and the greed's really high. So you should be getting out, right? And then you compare that relative to chandelier exit indicator to measure volatility as well. And you're going to be like, okay, I should probably get out of this trade. So this guy who was like, should I take some of my profit? What should I do? I'm up already, right? He needs to learn the next step, which is when do I take my profit and when should I get out? And in my opinion, the way I would answer that is you've got to be able to understand when the market trend changes. And the market trend changes when risk levels are really high, when the greed is really high, when chandelier exit indicators are going to move to, they're going to drop the volatility. So the ATR ends up changing as well. So if you're aware of all of these changes, you should be able to make that decision of taking your profit. And then when the cycle changes again, for example, if you choose a 12-hour time frame for the chandelier exit indicator, okay, if it breaks to the red, perhaps you take some profit. Maybe when it breaks the next resistance and it turns green again, you can enter a long position. Okay, so does that make sense? So let's take a look at the liquidation heat map as well. So this is an estimate based off of where the market would face heavy liquidation if we were to get to this price point. So the stronger concentrated it is, here's the scale here, the more yellow it is, okay? So if you can see here, the yellow is around $45,000, okay? Which means if we get to this price point and we break it, a lot of short positions will get liquidated, which means that if the short positions get liquidated, then we're going to have a catastrophic rise. So the heat map is going to identify some major resistances for us. Because what do you do if you're in a short position? How do you close your position? You have to long it, right? How do you close your long position? You have to short it, right? You have to close your position by selling. Just like how when you're in a short, you have to close your position by buying. So if enough people have to close their short positions and they're forced to buy, well now, because the bulls are trying to smash to the upside and there's a lot of people in short positions here, then the short sellers are forced to buy, which only adds strength to the bull market. So if $45,000, okay, if $45,000 ends up smashing to the upside, then we're going to see a catastrophic rise. Do you get that? Just like how on the lower side, okay, like right now on the lower side, let's go to like a higher time frame. Let's go to like a 3-month. So if we were to drop right now, where would a strong support be? A really, really like incredibly strong support is like $34,000, and we're gonna have to sell about $1.1 billion of Bitcoin to liquidate around that range, and this is only an estimate. An estimate as well. So you can just see that if 45,000 breaks, we're gonna smash upwards around there on a lower time frame. We saw that, and then 34K is also really strong support. And if it breaks, there's no doubt in my mind we'll hit the golden ratio range. Okay, the golden ratio loves to be tested by Bitcoin. And on the higher time frame, just Bitcoin. By the way, I am loving this new chandelier exit indicator of mine, the one that I've built onto it where I now have a table. It's really, really cool, man. I don't know if you guys see that down over here, but yeah. So I like to make mine a little bit bigger. Let's go large because I have a huge monitor now. Okay, so oh, you guys don't see that. Okay, I'm gonna change this so you guys can see it. Middle right. There you go. Now you see it. Okay, so take a look at Bitcoin. Okay, in the first bull market over here, when we fell down and then we came back up, the retracement here was golden ratio. We liked the golden ratio and we've gone there many times before, right? We hit the golden ratio exactly right there. That is a major thing. And then we end up rallying after the golden ratio like 346%. It's ridiculous. And another time, just as an example, is the first drop over here. The first drop hits the golden ratio. And then we end up rallying a pretty significant amount of about 60-something%. It's not always going to hit the golden ratio, but we've seen that based off of history, it's hit there many times before. Did it even hit here as well? I think it did. All right, right here on a lower time frame, like smaller time period, it hit the golden ratio there, and then it continued down, right? So golden ratios are very sought after. Hit the golden ratio there again. That's 2 rallies in a row. I think they probably hit it a third time here as well. If it did, I would just laugh. It did hit it actually. No, it hit 0.5 this one. So right now, we're getting pretty close to there, okay? We're at a point where we are getting very close, not even that much away. So I think Bitcoin's going to hit 48K eventually. Could be next year when the ETF is likely to get approved. All decision deadlines for the ETF is going to be around January the 10th. So we could see a simple rise. It's also exactly where the previous resistance was, like around this range. So 48 to 50K is not that unrealistic very soon, okay? In my opinion, it's not unrealistic at all. And giving you guys a really quick Elliott wave count, because I know people love that, okay? I don't think I'm going to do a market scan because it's just not enough time. It's already been like a long stream. I do believe this is the first wave that has formed officially in here. It's one of the crappiest waves that you can see, right? But this one might even be at a top already. Okay, it might be at a top because we do see the breakdown of the 5 waves, like, and it's almost irrefutable. Like the first, they're really crappy waves in general. Like they're not good looking waves, they're not impulsive, but that's got to be the first wave. There's no other choice. And also, this has got to be a 3rd wave scenario. Like there's really no choice but to count it like that somewhere in here. Okay, and that's a 5. Now the 4 may not even retrace much at all. It can form a very bullish pattern with very little retracement that throws everybody off. So it might even make an ascending triangle because, let's face it, right now we already see a double top, okay? And the double top is usually indicative of an ascending triangle that's going to form. And it fits the criteria for all Elliott wave right now, where the 3rd wave in a bull market is longer than the 1st wave. Where is my fib? Sometimes it just can't find anything. Fibonacci extension. Where is it? Ah, here we go. So fib extension, we see that 3rd wave is already greater than 1-to-1, right? In fact, it's a really good 3rd wave that formed. So this means that it's very likely for us to hit 48K. Like we don't know when, but it's likely. And I'm going to bet my life on it. But after that, like what I'm betting on, okay, this is my bet. I'm going to make a wild prediction. And believe it or not, I've usually been right about the bull market for those that have been following me for a while. But if I'm wrong, of course, I'm going to accept humble defeat. So I'm expecting a $48,000 hit around there to 50K, okay? And then after that, I'm expecting a major drop, okay? It's going to be before or after the halving. I don't know. But during that time, because the halving always has a drop before or after, who freaking knows? And during this major drop of mine, that's where I'm going to buy everything. Like, I'm going to buy the rest of everything. But during this peak, if I can identify one, I'm going to sell some of my position. Not much. Like, I'm not stupid to the point where I'm going to sell like 70% of my position. I'm talking maybe 10 to 20% of my position. Because you do have to manage your positions in some ways on a micro level, right? You have to look at, or on a macro level rather. Then it is during this dip where I believe the 3rd wave will now form, okay? The 3rd wave is going to do something ridiculous. So then basically what I'm looking at is this type of price action where it's going to hit like, say, 48K, who knows when, 50K, and then a drop occurs, and then the next wave begins, okay? Then the 4 and the 5 will begin, which is really easy to count in my opinion, okay? So let's just say that we hit around 50K, hypothetically. And then let's just say we end up retracing bullishly, okay? We end up retracing bullishly to 382. Now, we take our Fibonacci extension based off of where it began to 50K where it ended to 382. And then we just take a look at a simple extension of, for example, a 1618, which is not even close to what a bull market would do. Realistically, what a bull market would do is probably something like between 1618 and 2618, okay? 261, and it's probably going to be much more parabolic than that, to be quite honest. It's gonna like be meteoric of a rise leading to 25, okay? And then in my opinion, right, let's just say that we end up getting between 1618 and 2618. You're already at $100,000. And this is like highly possible for us to hit over 100,000 just based on this setup right here. Even if we didn't retrace that bullishly, let's say we got to 0.5, right? Where 34K was the strong support, remember? And if we took a place between, for example, like 1618 and also 2618 again, you're still getting about $106,000, okay? And then now let's just say wave 4 is the one that retraces super bullishly, okay? So now wave 4 retraces super bullishly like 382 or something like that, okay? So now it retraces to 80K, and then the next wave after that, what it ends up doing whoops, is it does a 618 extension. So guys, if you use this theory back in 2017 and try it for yourself, you're gonna see how accurate it was, and it came true. But it also made some major extensions, like way bigger than 1618. I'm just giving you the most conservative possible extension. And now we take a 618 extension, and now we're at $126,000. So this is a really realistic scenario. So if you think of a possible bear scenario, like, it's almost hard to imagine one right now, unless we break unless we break a lower low. Like, I'm talking about if we get to like below 31K, below 25K, that would be invalidating the bull market. That could happen, but I would bet my life on it that it won't happen, just based off of all these metrics that I'm talking about. So I think I'm going to end the video here, guys, because I think I've been talking for a long time already, for 31 minutes. Yeah, I will end it here soon. And guys, if you are not in my Discord group, if you haven't taken the Ultimate Bull Market Survival Guide yet, you need to. And I just want to make an announcement that this indicator of mine, the Chandelier Exit Indicator, it's going to be in the new year available to everybody that is enrolled in the course. So this indicator of mine is going to tell you a bullish trend. Let's just say, for example, like how easy it is to use, okay, when you're scanning. Let's just say I set the parameter, okay, to something where I want it to be ranging really high and far away from the Chandelier Exit Indicator to show me maximum volatility. So let's just say I set it to something like 15% away from whatever time frame I want. And I could also choose the trending period as well. Let's say I want to look for something over 7 days that's trending bullishly above the Chandelier Exit Indicator, okay? And also trending more than 15% away. So what I'm going to do is I'm going to look for until I find a coin on the 4 hour that's trending bullishly, and both of these light up green. So I basically just have to go to my watch list here, go to 4 hour, and look for something that's trending just by literally just going down. So this one is trending huge. Notice this. This one's trending. It hits green, trending over the percentage I specified, but it doesn't light up in the bullish side because it hasn't been 7 days. So both of these criteria need to be met for something to light up green. So this way I'm able to, like for example, boom, I just found ING, okay? So ING is now instantly going to go on my major watch list, okay? Which is already, no, it's not on there yet. So ING is going to go right away on my major watch list. And this is how you're able to identify the hottest coins. So if you use a crypto screener, for example, you're only going to see this coin's move 5% today, right? So it might not bring it to your radar for longer term picture. But this indicator of mine, it allows you to notice the longer term trend, and it tells you how far it is away from, for example, the green line. So the green line, right, you see it's 31.51. So it's exactly around this range. Actually, oh, sorry. I'm thinking of something completely different. I haven't used this indicator for like a week and a half since I moved now. Sorry, this range refers to the volatility. I feel like an idiot right now. Refers to the volatility for the trend period, okay? So the trend period, the SLR is the one I was just talking about, the stop loss range, okay? So if I specify 7 days of a trend here, what you're going to notice is that there's a little line. Where's the line here? Where is it? Dashed, and it's green. I have to take a look at my settings. I don't know why it's not on right now, but it should be on. Okay. So for the 7 day period, it's going to measure. So 7 days back, still have some tinkering to do. So from this point here, 7 days ago to the high right now, okay, it's moving to, not the green line, sorry, for the price point of the 7 days to where it is now, it has moved 31%. And what the SLR refers to, let's say I set the SLR for 10, where I also want something far away from the green line. So for example, right here, okay, this price point to the green line is that SLR that you see. So it's showing you that it's extended really far away from that green line, which shows major volatility, okay? So you're able to take a look at all of this. So if I set my SLR to also look for something over 10%, then now it's going to light up green as well. Okay. So let's see if this guy does. So there you go. So I don't know why it didn't. I have some tinkering to do with it because it's not doing exactly what I needed to do at all times. But the point of this indicator is to show you which coins are trending the most over the chandelier exit indicator. And I demonstrated to the group before how highly effective it is. But anyways, it's something small. It's going to help you find coins to trade. It's going to be included in the emergency bull market survival guide. So if you guys want a crazy deal to join me and trade during the bull market, you need to pick up my guide. You need to get in my Discord group. I am going to outtrade the majority of every trader out there and call the majority of my positions because I'm that confident. Anyways, I'm going to end my live stream here. I look forward to having a lot of you as my students if you're not there already. And take care. Enjoy your Saturday. And by the way, guys, I'm loving the new house. The background, everything is pretty sick, right? I love just the setup in general. My wife let me have an entire room to myself, right? With like a home theater, a sofa, like 120-inch movie theater is gonna go there. I have an elliptical, I have a gym in here. So very happy in the new office. And I hope that it's gonna bring me a lot of luck and fortune. And I hope you guys have a great rest of the 2023 year. And we'll talk soon. Bye now.